Look at this, the Indian rupee. In 2025, it tells the entire story. The rupee has crashed below 91 to the dollar, a historic low. It has lost over 5% this year, and Bloomberg declared it Asia's worst performing currency. But currencies don't fall without reason. This isn't just about exchange rates, this is about an economy once called the world's growth engine, now clearly stuttering. So what went wrong with the Indian economy in 2025? A weak rupee means costlier imports, fuel, food, raw materials. Inflation hasn't surged yet, but the risk is obvious. A weak exchange rate always shows up on the store shelves. The pressure is building on the common Indian. And then there's confidence or the lack of it. Foreign investors no longer trust Indian markets the way they once did. In 2025 alone, over $18 billion exited India. In the first 2 weeks of December by itself, $2 billion were pulled out. After years as a global favorite, India's stock market had a brutal 2025. According to reports, India's equity market has suffered its worst relative performance in 30 years, not just in Asia, but across emerging markets. A slowing earnings cycle, a weakening rupee, and heavy foreign outflows have pushed Indian stocks far behind their peers. This is a major shift from outperformer to underperformer. At the start of 2025, India-US relations looked set to reach new heights. India's Prime Minister Modi was among the first world leaders to meet newly elected US President Donald Trump. The optics were strong. The promise was bold, doubling bilateral trade to $500 billion by 2030. But cut to December, and reality looks very different. The US has pressured India to cut back on Russian oil imports, arguing they help Moscow withstand Western sanctions and continue the war in Ukraine. In August, Washington imposed an additional 25% tariff on Indian imports, pushing total duties to as high as 50%. India is now amongst the highest tariffed countries in the world, even higher than China. While the US acknowledges some reduction in Russian oil imports, India has not officially said it will cut back further. This strategic balancing act has come at an economic cost. India's trade deficit remains unstable. It touched an all-time high of over $41 billion in October before narrowing to around $24 billion in November. Combined with the weak rupee, the stress on the economy remains high. Now let's talk about jobs. The US has tightened H-1B visa rules, targeting immigrants from China and India. Nearly 70% of H-1B visas over the past 2 years went to Indians. The door is now narrowing. For millions of Indians, the American dream meant dollar incomes and permanent settlement. That safety valve is closing and the pressure is shifting back home. Official data shows unemployment fell to 4.7% in November 2025, the lowest since April, helped by rural employment and rising female labor force participation. But here's the real problem. Educated unemployment. Reports show 83% of college-educated Indians struggle to find jobs. Degree holders are applying for sanitation, peon, and other low-skill roles. This is not inclusive growth, this is jobless growth. India's GDP growth stands at 6.5% in 2024-2025, with 6.8% forecast for fiscal year 25-26. Solid numbers, but not enough. The promise of a $5 trillion economy by 2025 has not been met. IMF data suggests GDP will remain around $4.125 trillion in 2025-26, with the $5 trillion mark now likely only by 2028-2029. A collapsing rupee, foreign investor flight, trade penalties, geopolitical pressure, jobless growth, educated unemployment, missed economic milestones. In 2025, world's growth engine didn't stop, but it clearly began to sputter.